KLCI, as I said, is one of the best performers year to date in ASEAN. I think only Vietnam's done better than that. From a quant and historical perspective, how can you put this into context for us? Especially in terms of where the current market sits.
Thanks, Dylan. It's great to see you again. Yes, you are absolutely right that the momentum is moving in the direction and favor of the Malaysian capital markets. So, on average, our Malaysian model portfolios have been one of the better performing suite of portfolios among the three that we manage, notably Singapore, Thailand, and international. 1 year returns have averaged about 10%, and this was largely driven by a recovering export market and the fact that Malaysia was largely a laggard to regional capital markets. So basically, these were two themes that drove investors back in flock, including institutional activity flows. So much so that now we really believe that Malaysia's 3 months 5.1% performance has the fact that it's caught up and is at least on par with MSCI's ASEAN's 5.4%. We believe that if this momentum continues through, we will likely continue to see further legs in this part of the world. Maybe the second thing that we can help investors get some sensing about around this set of performance is that we can see and also prove that Malaysia market is now entering the risk-on phase of this cycle. Malaysia's PE is still not really expensive relative to its 5-year PE range, but it's important to note that the first liners and large caps have suddenly run, and therefore in this round of rebalancing, we are targeting mainly the second liners to replace some of the constituent stocks.
Right. So that's what I want to talk about. I mean, first of all, let me say what a difference a year makes, right? I mean, last year, Malaysia was one of the worst performing markets in Southeast Asia, and now we've seen this huge turnaround. So I think when we kind of look at it from that context, what are the sectors you think that have already kind of run ahead of themselves? And also, conversely, what are the sectors that are offering a lot of value right now?
Okay, when we look at sectors, we're actually tracking the MSCI sectors in this regard. And so we can see that the sectors that have run ahead are utilities, consumer discretionary, communication services, IT, and real estate. Now, real estate is the one that has gone really hard because of all the good news that have been coming through, including the announcement between the Singapore and Malaysian governments that they intend to set up a special economic zone in Johor. The sectors where we see value are mainly four, and these are financials, energy, which is largely oil and gas related in Malaysia, industrials, and materials. These are four sectors.
Right. Let's have a look at your overall portfolio performance up on screen right now. And while that's coming on, can you give us some color on some of the key inclusions as well as some of the key exclusions you made across your portfolios?
Okay, so breaking down the four sectors that I just talked about earlier, let's start with the ONG sector. Now, ONG continues to be a strong theme for us. The oil price environment looks firm at $80 per barrel. And we believe that this will likely continue to stay at these levels for the rest of 2024. I mean, the specter of war, in Middle East is just one aspect of why we feel this oil environment is going to remain strong. If you look at supply and demand from that perspective, we think that that is actually the true reason why we believe that that the oil price will likely remain firm. So for this team, we've added Vallesto Energy and Kellington. These are mainly in the second liner names, but we feel that the fundamentals are pretty solid for these two. Then for industrials and materials, we have added IJM, Hume Cement Industries in anticipation of greater contract flows from government infrastructure awards. Perhaps just to mention earlier, to my point earlier, that the real estate sector looks like it's run ahead, but we think that perhaps some of the second liner names could be worthwhile watching. And in this space, firstly, we think that maybe SPCTA would still have a bit of legs to catch up with in terms of the other runs within the real estate sector.
Got it. So, Sangya, I'm a bit of a medium risk sort of guy. So, for somebody like me, what sort of model portfolio do you think suits me the best?
Okay, so all of the model portfolios are built with different factors. For example, PE and return on equity would be considered as factors. So when we look at the return profiles of all of the factors that we monitor, we can see that markets aren't really interested in quality-related factors right now because, as I put forth earlier, it is a risk-on environment. So most of the play so far has been concentrated around factors related to value, momentum, growth, and even low volatility. So we think that if you are looking more at the medium term, the quality model portfolio is the one that I would look at.
Got it. So, I mean, and that's for a personal risk profile for me, who is a little bit more of a medium term, medium risk sort of investor. But I think one of the key things to kind of highlight to the audience here is that there is a model portfolio for everybody, depending on your investment horizon as well as your risk appetite. So do speak to your salesperson or access the model portfolios through the app today. With that, I want to say thanks, Sengya, for joining us.
Thanks,
And
Dylan.
I want to bring chart guy Nick on the line. And Nick's, as always, has got some very interesting technical charts to show us, and with some very strong and always high conviction picks. So, Nick, what have you got for us today?
Thank you, Dylan. Good to be back here. All right, so let's take a look. We have two stock trading idea for the week. So the first one will be SI Engineering. So if you look on the screen, the chart is actually not a daily chart, but rather a weekly chart. So the reason why I'm using weekly chart because the stock nature is pretty much compact in terms of how the price movement would be. So using a weekly chart, you can get a better idea how the stock going to unfold. Now, the truth is, this stock is not, despite we are using quant scoring momentum, we are not actually rely on breaking out kind of the thing. So we are actually looking to the accumulate within the support level. So one of the reasons, if you look on the support level, right within at 2.21, it has been tested at least twice for the past 6 months. So that is actually quite stable support level. So at the current level, I think today is already down about 1.6%. Is considered quite attractive in terms of the risk to reward ratio. So hence the reason why we highlighting this particular stock. I think another one thing to look at is actually how the RSI has been reacted. So RSI, if you look on the screen, is quite flat. So tell you, despite any pullback, the buying interest keep coming in, particularly within those particular zone. So because of that, we are looking. This is quite attractive. What we call the accumulation level. So given risk to reward ratio, which is a 4% downside risk and 12% upside potential, we think is quite interesting pick. So that's the reason why we're highlighting this particular stock. For the second idea, we are moving back into a daily chart. So for second idea, we have.
Let's see the next chart. Yeah.
Valuetronic. Now, Valuetronic, if you look on the weekly chart, the trend structure look quite attractive. So I'm switching back into the daily chart. If you can see how the trend is pretty much unfold. So if you look on the screen, we are using a quite dynamic moving average, which is 13, 33, and 88 day moving average. 88 represented by the red color line over there. Now, the reaction start since November, once the stock start to pick up the rally and so on, it has been the red line has been something that we consider a long-term barometer in say that the trend whether it remain on the bullish or bearish. So what may interesting is since mid-February, the stock price is pretty much creating something that we call a short-term correction, and the downside was kept within 38.2% of Fibonacci level. Now, another good thing that we are looking at is actually you see a double rejection of all the past 3 weeks. So at the similar level, 38.2% of Fibonacci, and the red line there represented by 88-day moving average. So it indicates there is plenty of the interest coming in. And if you look on the reaction RSI, how the momentum is actually rejecting to go to be inside the so-called oversold territory, that tell you that momentum is pretty much remain elevated. So we've seen a breakout move by RSI, riding above the long-term average line. So momentum is actually gearing up. So we think there's a decent chance for the stock to continue their ongoing uptrend. Hence the reason why we highlighting the stock. In terms of risk to reward ratio, it also look quite attractive. So in trading volume also improving. Hence the reason why we think the uptrend set to continue at least in the near term.
Excellent. So SI Engineering and Valuetronics, momentum, uptrend, all of that on their side. So some investors, please do take a note of that, and you can get a little bit more color on both of these in our newsletter today. Thanks, Nick, for joining us.
Thank you, Thilen.
Okay, now let's turn to a sector that is relatively unloved, which is palm oil. We've got our analyst Chi Ting Ong, who's been writing extensively on this sector and is keeping a fairly neutral outlook on the overall sector. I would say it's more neutral to negative. The stockpile of crude palm oil, or CPO as it's called, has hit a 7-month low in February. This is mostly due to seasonally low output, as well as there's been a little bit of a pickup in terms of consumption. Of course, that's driven a little bit of a mini rally on CPO prices recently, but Chi Ting thinks that this is going to be fairly short-lived. And this is due to two very specific reasons. One, he expects palm oil output to start to seasonally pick up as we go into the second quarter and really peak in the third quarter. So supply is no longer going to be as much of an issue as what we saw back in February. And number two, and I think this is quite important as well, a lot of South American harvests in terms of soybean oil will start hitting the markets starting from this month. So there's going to be a lot more cheaper alternatives out there in the global markets. So this is going to put some pressure on CPO prices. Overall, if you look across Chi Ting's sector calls, most of his stock calls are holds at this stage. And if you really want to play the downside risks to CPO prices from here, we've got two stock recommendations. Both of them are sell calls. The first is TH Plantations, which has a target price of 58 cents ringgit versus a share price of around 76. And also TSH Resources as well, which we also have a sell on at this stage. So one way to play the downside risk to CPO are to play the short side of these two stocks. Now, with that, let's finally go and talk about Thai power generation. We're really doing a tour of ASEAN today. Nachapon, who is our Thai energy analyst, he's initiating on Energy Corporation of Thailand with a buy rating and a 150 Thai baht target price, which is about a 30% upside from here. Stock's not really done well, like you can see that from the chart. But if you really look at the Energy Corporation, they have about 35% of their capacity coming from independent power producers, and around 41% of their capacity is coming from overseas, from countries like the US as well as Indonesia. And one of the key things that kind of really stands out about this stock is that the balance sheet has very, very low gearing. Debt to equity is only around 1.3 times, when debt covenants are around 3 times. So there's a lot of room for this company to borrow and add more capacity, so they can actually buy growth going into the next few years. Plus, it's trading at a discount to peers, so you can buy this company cheaply, and it's also offering a pretty decent dividend yield of around 5.6% for investors to wait. So very strong earnings visibility. If anything, there's going to be potential for upgrades as the US capacity starts to ramp up. Our target price of 150 Thai baht implies a PE of around 9.8 times, while historically this stock has traded at about 11.2 times. So there's quite a bit of upside there. So do take a look at the full report in our newsletter today. Now, I want to just do a little bit of a sidetrack. We've got a question from Chris Tan from the audience. He's asking, new private home sales were down significantly. What, if anything, should we read into this, and and should it affect how I think about my portfolio? Chris, that's a great question. Now, if you look at February house sales, right? The data for sales, February was Chinese New Year, so developers generally withheld a lot of new launches. Only around 45 new launches were launched in February versus around 417 in January this year. And if you actually go back a year ago to February, there was about 401 units sold then, and Chinese New Year, remember, was in January last year. Plus, of course, there is some overhang in terms of high interest rates, higher stamp duties, and also there is some buyer fatigue when it comes to the high price tags associated with pricing. Now, having said that, if you go into March, we think that you'll start to see a turnaround in private house sales. Lentor Mansion was launched in March, which is a 500 plus unit project. 75% of it was sold on day one. So I think you'll start to see a little bit more positive news flow coming on the property sector. Now, having said that, we're not looking for a major increases in property prices this year, and that's our house view, simply because there is quite a bit of capacity that is coming online this year. So that's something to watch out for. We're a little bit more neutral on the developers at this stage. We're a little bit more positive on selective REITs. So that's something to watch out for, particularly the hospitality REITs and so on, ahead of rate cuts. So thank you very much for that question. Now let's quickly go into upcoming events. As I said, very busy week across the world for central banks. In Singapore as well, we've got inflation rate coming out on the 25th of March, industrial production 26th of March, and Nordex coming out on the 18th of March, FOMC meeting on the 20th of March, and that all eyes are going to be on that. A few events I want to highlight. We've got United Hampshire REIT, the management is hosting a webinar with us tomorrow on the 19th. We've got a virtual seminar on the ASEAN tourism recovery. That's something to watch out for on the 20th of March. And on the 21st, we have CNMC Goldmine Holdings. This is an invite-only event at our building here. So please speak to your salesperson if you would like to come and meet management live at our event on the 21st of March. With that, we've run out of time. Thank you so much for joining us today. And we hope to see you next week. And until then, have a profitable trading week. Thank you.